Welcome back to TheStreet.com TV. I'm Brittany Umar, New York, discussing Brett Arrends' article on investing in the real estate market. If you think real estate agents are miserable about the housing market, you should talk to Wall Street. Bulls have been slaughtered over the past year after prematurely claiming to spot the bottom in collapsing housing prices. This past week, homebuilder Lennar was the latest to warn that things are even worse than expected. Prices are evaporating and they see no bottom. And homebuilding stocks from upmarket Toll Brothers to Pulte Homes are plunging to multi-year lows. Things could get worse before they get better. The National Association of Realtors reports inventories have now skyrocketed to their highest level since the crash of the early 1990s. The backlog of unsold homes sitting on the market has now hit the equivalent of 9-month supply. Housing expert Professor Bill Wheaton expects prices to keep falling for another 18 months before hitting rock bottom at the end of 2008. He says the meltdown of subprime mortgages is likely to get worse over the next year as rates reset. He predicts waves of foreclosures and auctions and bankruptcies in bubble hotspots such as Las Vegas, Miami, and Phoenix. Overall, he thinks average prices nationwide are likely to fall another 20%. And right now, the home building sector is pretty much priced for disaster. So there's a pretty good chance that anything better than that would produce a rally. When it comes to home building stocks, one of the best ways to measure the valuation is to compare the share price to the value of their land, unfinished homes, and other assets. Most of the time, home builders trade at a big premium to the value of their assets. Over the last 17 years, they've usually traded between 1.5 and 3 times this so-called book or net asset value. Right now, this week's sell-off has left shares in Toll Brothers and KB Homes, each trading at just 10% over book value. D.R. Horton shares have fallen to 4% below book value, while Pulte Homes has actually fallen 11% below book value. In each case, this is a fraction of where the stocks usually trade. The last time we saw valuations this low was in late 1990, and that was in the depth of the last real estate crash. This certainly doesn't mean the shares can't fall further, but it does mean Wall Street has already pretty much assumed disaster will happen. So if this is not the time to buy a new house, then how about an exchange-traded fund that invests in housing stocks? And if not that ETF, then how about call options on the fund? You could get all of the upside in any kind of rally, and you'll only risk a small stake. But if you want to bet the other way, 2 ETFs will spread your bets across the entire homebuilding sector. The first is iShares Dow Jones U.S. Home Construction Index Fund, which was launched just over a year ago at $49.50. It plunged this week to a fresh low of $31.31. The second ETF is State Street's S&P Homebuilders ETF. Both funds invest in all the top home builders and in related construction stocks. If you're thinking about buying a home right now but are waiting in the hope prices will fall further, there is a special feature of the Home Builders ETF you should know about. Instead of buying the fund, you could buy call options. That's like a wager on the shares rising. If the sector rallies, you get a huge upside. But if the fund's shares stay where they are or if they fall, all you lose is your small stake. The Homebuilders ETF shares ended last week at just $30.23. Call options that give you the right to buy those shares at $35 at any time between now and December cost just 95 cents. Now these are high-risk plays. The best way to view call options is as a wager, not an investment. If you spend $1,000 on options, you have a very real chance of losing that $1,000. In fact, if the shares stay below $35, it's guaranteed. But at least your downside is limited to that $1,000, and if the housing market recovered, you'd make a huge profit. For more details on investing in the real estate market, check out Brett Arrends' full article on TheStreet.com. I'm Brittany Umar. Stay tuned for more of TheStreet.com TV.